Hello and welcome to the API Chronicles, Unlocking the Future, a live celebration of APIs hosted by Marqeta. My name's Jazz Shah. I'm a fintech product consultant helping fintechs and financial services organizations build better digital products, and I'll be your moderator of today's live stream. Today, we're discussing Buy Now, Pay Later, the long-term future of short-term lending, where we'll discuss some BNPL partnerships with the guests, talk about customer centricity, highlight some underexposed use cases of short-term lending, and get some opinions on the long-term outlooks. So I'm delighted to be joined by Christian Waldheim, co-CEO at Credit2, Matthias Deacon, Head of Payments at Daily Banking at RBI, and Marketer and Solutions Engineer, Biljana Petruszewska. Hopefully I got that right. And as we have the benefit of running this as a live webinar, just a reminder, we'd love some audience participation. So drop your questions and even some thoughts in the comments during the stream, and I'll do my best to get to them as and when they come up. So let's kick things off. Standard webinar, live stream etiquette. If you could introduce yourself and tell us a bit about your organization. Let's start with you, Christian.
Well, thanks for having me. As mentioned, I'm one of the MDs of Credit2. It's an Austrian-based fintech providing embedded finance products. We serve banks and issuers with any sorts of lending products, be it for e-com, point of sale, or any direct channel. Worth mentioning, we are a pure tech play, so we don't have a license, we don't have the balance. This is everything which stays with the banks, our clients, and we empower them to kind of get their lending business 100% digitalized, including the back office. So we follow a kind of material outsourcing approach, fully ISO certified. And our kind of secret sauce to a certain degree is that we have the ability to bypass the core banking systems of our partners to the degree needed to speed up. And worth mentioning as well, we are country agnostic. Thanks.
Great. Matthias?
Sure. Welcome. Thanks for the invite. My name is Matthias Deacon. I'm working for Raiffeisen Bank International, which is one of the leading banking groups in Central Eastern Europe. I have the privilege to look after daily banking and payments. Payments includes everything from cards over to acquiring and also retail payments and FX. I've been working in and around banking, retail banking for quite some time now, also in different jurisdictions. And I think, obviously, as a bank, we have quite some interest in also doing something around in the space of Buy Now, Pay Later. Very pleased to be here also with Credit2, who is one of our partners, as well as Marqeta, with who we also work together today already in one of our entities.
Amazing, and we'll definitely touch on what some of those partnerships look like in a bit later in the session. Biljana, firstly, did I get your name right?
Yes, you did. Thank you very much.
No
Great
worries.
practice. And thanks for the invitation today. My name is, as you mentioned, Biljana Petruszewska. I work at Marqeta as Solutions Engineer for a year and a half. My role here is to work with the current, existing, and prospect customers who want to use our platform to make a better understanding how to utilize our platform to make better solutions, card solutions on their side. Just a brief overview, Marqeta is a global standard for modern card issuing. It's a global platform that provides essential infrastructure and partnerships and services to support our customers and brands to design and to build most innovative card solutions. So as I said, it's a highly configurable and secure and reliable platform that our customers leverage to create most innovative debit or credit or prepaid products, both consumer or commercial.
Amazing. Let's jump to our first question. I think, Christian, you mentioned, you spoke about Credit2 there, and I think you specifically mentioned, they're a tech player. So, speaking about Credit2, focusing on parent banks with end-to-end, with an end-to-end installments platform, just to clarify for everyone, what's the unique value that Credit2 brings from your perspective, and just like wrap it up for us?
Sure. Well, it depends a bit on where the pain points are, and as well as the market and the product. But I think in general, you can say, based on our product as a service platform, we can really provide individual solutions and products, which all lead to a very easy and lightweighted integration, which is all about costs. And obviously, we speed up with time to market. And in the end, it all results in lower total cost of ownership. And this is possible as we kind of have quite everything in the box if we get into the details of end-to-end, be it for revolving credits, cash loans, be it for pay per invoice, subscription payments, or point of sale financing stuff. It's all there in terms of product flows and UI. We offer all sorts of core banking pieces, be it from origination, eligibility, setting up the plan, managing the plan. And we also run the subledger on behalf of our partners. And of course, also operation and front ends. And that all comes down to B2C and B2B products. And we follow a responsible lending approach. So everything we do, even though it might be factoring based, it's very, very much near to a credit scoring approach. And with that, we also address all the challenges we see with classical buy now, pay later products out there.
So yeah, you mentioned, I guess you've just ended up with classical buy now, pay later, what mainstream folks would understand. So you would say you're non-classical in that sense.
From a consumer perspective or customer perspective, definitely it is, if it comes to ease of checkout and everything, and also support the merchant to get the deal done. But if it comes to which degree you do origination and scoring, and also ensure that the customer can really afford the product he is buying, we follow a different approach as we always work with and upon the banks. And with that, of course, their model they have with the regulator in the country and the way how they treat it, which is significantly different as I would say B2C fintechs do it, without mentioning any names here.
Yeah. I don't think we need to. I think everyone's on the same page there. So jumping to you, Matthias, from RBR's perspective, because there's a partnership integration there with Credit2 as well. From your perspective, what was the motivation behind using Credit2 as a provider for your short-term lending facilities? And were there any specific trends or requests from customers driving that decision, or was it just giving your connected businesses the ability to surface that option to their customers?
Yeah, thanks, Josh. I mean, a couple of questions you actually want me to cover here, so let me unpack that a bit, right? So, kind of maybe just to set context, as I said, RBI is a large banking group, universal bank in the geographies where we operate. We deal actually with a rather fragmented market, right? Countries in the EU, outside EU, etc. And we serve private individuals to SMEs to large corporates, right? I would also say RBI is a quite entrepreneurial bank, if I may say that, right, in relative terms. So it shouldn't come as a surprise that there is an appetite, openness to try out, experiment, and also to partnerships, right? So that's, I think, also in our DNA, and I think this is important, right? So it's nothing unusual or extraordinary. When it comes now to BNPL, absolutely, we are working very close with Credit2, right? We basically offer a product called Cashpresso to the open market, where Credit2 today provides the infrastructure, a lot of the underlying piping processes, capabilities, while we leverage our balance sheet as a bank, right? And what was the motivation? As I said earlier, I mean, we also do acquiring, for instance. We have a lot of SME customers. Give you a sense, I mean, we are one of the top 20 acquirers in Europe, right? So clearly, BNPL as a type of payment has been rising for many customers, particularly the millennials, Gen Z. It's much more accepted than, let's say, credit card. Also provides a lot of advantages when it comes to customer experience, yada, right? So, I mean, the choice we have is, are we building now in-house something where we might not have the necessary infrastructure, also where maybe our IT infrastructure might be a bit fragmented. So speed to market is incredibly important. right? But also this opportunity to kind of test, see how things go before we then maybe down the road in some years make a decision to kind of like build certain capabilities ourselves, right? Not saying that we are doing that, but it's just quicker, provides us ample room also for innovation, also expertise and experience in that space that we otherwise need to build up. And I think this is the true value of a partnership here, right? So I think for us it was logical, because while we have in many markets some solutions already live which are kind of fall in the scope of BNPL, we didn't have a solution which was truly open market, provided the benefits that something like Credit2 could provide, right? And didn't really cover all the segments accordingly, right? And I think that the real question is rather to say, well, it's always easy to say you do a partnership, but for me the key question is, what does it take to make a partnership successful, right?
Yeah, I think that's a great point about build versus buy as well. So, or build versus off, look for something off the shelf. I think it's a debate that a lot of people have, and I guess it's a really great spot for Credit2 to be in, especially with lots of large financial services organizations and even e-commerce platforms thinking about how to do it, but not wanting to build it themselves. Yeah, so I guess on that note, we're talking about another partnership, but it's another Credit2 partnership. It feels like this is sponsored by Credit2, but it's definitely not. The Credit2 Marqeta Visa partnership. So that was announced in November, and Credit2 Marqeta and Visa have partnered to create an end-to-end installments platform designed for banks. I guess this is more geared towards yourself, Christian and Biljana. But I'll start with you, Biljana. Can you talk a bit more in a bit more detail about what the platform entails, who the end beneficiary would be, and why the partnership?
Right. So I would like to start with the notion that we are quite proud, very proud to be working with Credit2 on this new partnership. And I have to say, this new partnership is allowing for us to launch a new payment solution. And I'll come back to that when you mentioned earlier, what is a classical BNPL, because I'm just going to touch on that later. So this, what we are doing now with Credit2 is actually a BNPL solution, as we mentioned earlier. And it's just another option that will provide our existing customers and new customers more flexible options when it comes to offering payment solutions to their end users. So in particular, this one, as I think Chris already mentioned at the beginning, it is an installment platform which allows splitting of transactions entirely on the issuing side. And that means that the cardholder will be able to select an individual transaction that, provided that the cardholder is eligible, that this transaction is eligible, and they will be able to pick this up from their mobile banking app and request it through the app as soon as they see this transaction coming through the live stream. So now going back to your question about what is a classical BNPL. So from Marqeta perspective, we do already support a kind of a BNPL solution, and these are big brands in the world that we already support with this. And this kind of solution means that it's leveraging Marqeta platform to create an instant digital card, but also a very flexible and configurable options on the platform to configure the card to behave in certain way that it satisfies this kind of a BNPL solution. And that means the card is being there's an instant card creation at the checkout point during the merchant checkout of the card holder, where we do create like a ghost card. So that's kind of solution that already exists on our platform, and it's highly popular as well, as I can say. But this one is slightly different because, as I mentioned, it only covers entirely the issuing part, and also a situation where the cardholder, the individual, can go and select individual card. So this one doesn't necessarily leverage the Credit2 solution doesn't necessarily leverage the instant card creation, but rather later on it's either pre-transaction or post-transaction selection and creation in equal installments for the cardholder. And it also, I can say, it supports both debit cards, credit cards, and both in-store and online transactions. So it's a widely applicable solution. And this is why we are very excited to be working with Credit2 on this opportunity, because they do have a very energetic team, and it's a pleasure to work with them. And also, I'm sure this will unlock a lot of other new use cases and opportunities for both companies.
I guess that's quite an interesting one, because I guess with Marqeta, Credit2, and Visa, you're saying that you could enable a new fintech, for example, focused on SMEs, to allow an employee of that SME to generate a kind of burnable card. They could go into a store, buy materials for a specific project, construction project, let's say, and post-transaction, not at point of sale and not at the merchant, they could go back and they could go, actually, I don't want to spend £5,000 on very expensive wood shipped in from Germany. I want to split this into 3 payments, smooth out cash flow, and with the Marqeta, Visa, and Credit2 partnership, you can do that.
Yes, correct. And the merchant would be paid as they would be in any other transactions. There's no change for the merchant side.
Yeah, I think, like you said, I think it opens up a lot of really important use cases. Again, I'm thinking a lot on the SME side, where cash flow and immediate access to cash is a big issue, but also on the consumer side, there's lots of problems to be solved there. Questions just popped in the chat from Mauro Asano. Question to Chris: do you think the buy now pay later model is also extensible as a short-term business loan?
Could be. This is actually something which is really popping up since January, pretty strong across Europe. That especially with SME and short-term financing, this seems to be a quite huge demand, where quite some banks see revenue potential.
Yeah, I hope that answers it. And he says thank you up front. I think he knew you.
Whereas I think the audience is. I mean, we are pretty clear that the biggest challenge, as always, if we talk about consumers and SMEs, is actually just the origination part. And depending on the country, which data we have, be it open banking, PSD2 data, or other data sources, this is actually the thing we have to overcome. And I think there are quite some interesting approaches to that.
Great. And I guess, is there anything to add to the discussion about the Credit2 Marqeta Visa partnership? Have you got anything to add to that, especially on the maybe? Yeah,
I think from the Credit2 Marqeta side, we are perfectly covered. I'd just like to add that we actually kicked this idea off in 2022 together with Visa in Europe, so the European team, and we jointly co-developed this solution with their expertise. Having really an agnostic product for whole Europe, very important, scheme agnostic, and it should be off the shelf. It should be easy to integrate, and obviously, and I think this might be a game changer. And this is also why we then connected with Marqeta, and again to get a fan out. That's pretty interesting. It's not just charge card, so the European credit card, but also debit card, as we are also able to originate a new credit line, where the split pay, which comes from the debit card, as obviously a debit card doesn't have an open to buy, can be split against. So it's all in there. And then I think it was quite clear that we also connect with processes, and we're very proud that we've been able to partner with Marqeta in this regard.
Amazing, perfect. And Biljana, back to you, just for a technical question, because we've got you on, so why not? From a technical perspective, what is that Marqeta and Credit2? It's part of Visa for now. What is the Marqeta and Credit2 integration like? Is there anything particularly unique, and just kind of how does it fit together?
Okay, so just on a high level, this at the moment, this will take with Marqeta a standard integration for customers. So I'm just going to step back a little bit and give a little bit of an overview for our audience who may not be very much familiar with Marqeta. But the way how Marqeta a platform was designed, was to give our customers a lot of power, how to design, how to build their own solution according to their own needs. And also, very importantly, a seamless and best consumer experience just by leveraging the Marqeta platform. So we do have an array of comprehensive suite of capabilities on our platform that, as I mentioned earlier, they would allow and enable our customers to build complete solutions for debit, for credit, or prepaid card products for both consumer and commercial use cases. And as I said, our platform, when they build their solution, the platform is highly configurable, and that allows them to keep a very deep control over how their cards work in real life, right? How they're used, how they behave, but also how to mitigate fraud as well at the same time. So all this requires for our customer to have an API integration into our platform, for which they use our core API. Then furthermore, we also have something called JIT funding, and JIT stands for just-in-time funding. And what this means is that we do the platform requires some kind of a JIT gateway through which we would be sending in real time funding requests for authorizations to our customers. So anytime there is a transaction happening on their card, in real time, they will be receiving through this gateway a funding request that will give them also even more control to authorize the transaction in real time from within their own system and based on their own business rules. So this building of this JIT gateway is also a requirement for the integration that our current customers already have if they wanted to build their own solutions. And also as part of this integration, it takes to build as well a webhook listener, which is also how we send real-time notifications of any events that happen on our platform to our customers. So at any point of time, they have granular view of what's going on the platform, and it's in real time, as I said. And so all this requires an integration from our customers, API integration, but also to do some kind of a lift on their side to build this JIT gateway. And we do make it very easy for our customers to integrate into our platform, starting with using our open and public API, which is published on our website. Anybody can go and see it. We also provide a public sandbox and a private sandbox that anybody can go and check our sandbox, and there's quite a lot of functionality in our sandbox that they can build a lot of stuff already. So we also provide other tools like reference applications that can help them build their own gateway. Or if they don't have internal resources, we also can provide references to our partner system integrator companies. So they've got an array of tools how to make this easy, and we've received feedback from our customers time and again that it's super easy to do this integration with us. So now, coming back to the specific solution for Credit 2, as I said, this because we already give a huge control to our customers to have a say, to control how the flow is going to look like for the cardholders, how the experience will look like. So they are best positioned to assess their cardholders and to create their business rules to say this cardholder is eligible for installment product, and specifically this transaction is also eligible for this installment feature. So they have the power already. They control some of the flow, and they already have this power, and they can decide. They have a decision logic on their side to say who is eligible. And now on the other side, Credit 2, as Chris already explained how the solution would work, because they have the capability, they've built a solution to create an installment plan, but now they have to receive this information from our customer. So they either get it or they receive it. They have to receive this information to be able to create this installment plan. They first receive eligible information about who is the cardholder and also eligibility for transaction. And based on that, they can create the installment plan, and they will inform the customer back about this installment plan. And all this, as Chris already mentioned, which is great, also generates a subledger. So they will, at all times, they will be able to inform the customer what's the current situation on this subledger. So this is so currently, at the moment, if any of our, as I said, this is for a solution would apply for our existing customers or future ones. So if we do have an existing customer who would be interested to use this solution, the current available integration option for them is to leverage Marqeta platform for the everyday transaction processing and card issuing, but also have a small extra lift to do and integrate into the Credit2 API to be able to communicate the eligibility decisions for their cardholders and for the individual transaction. So basically, this is how it works today.
That's a great deep dive into. I mean, it was more detailed than I thought it was going to be honest. But I guess it's that sounds the way you describe it. It's a no-brainer for existing people already technically integrated into Marqeta's ecosystem using Marqeta's APIs. It's actually, if they're thinking about kind of onboarding these capabilities, it's probably the very, very easiest way to do it would just be to use the existing APIs, probably very same keys, I guess, and use Credit2's platform that's connected.
And by the way, our team of solutions engineering as well would sit down with our customers, and we walk them through the platform, and we do numerous sessions, and we do support them through the journey of integration.
Amazing. And a seamless transition into the next question about customer centricity. So thanks for that, Biljana. I was not expecting such a seamless transition. So I've got a very quick stat. So according to research from Statistica, a source that I trust fairly well, almost a third of buy now pay later users in the United Kingdom have missed their payments at least once. I think the question of delinquency comes up time and time again when we talk about, I guess, classical BNPL. And many say this is kind of evidence of lack of customer centricity. So kind of jumping to you, Matthias, first, how does RBI ensure a customer-centric approach, whether it's in your collaborations, collaboration with Credit2, or just your general product development process?
I mean, I think it's probably the most important aspect, right? In RBI, we have something called our universal design process, service design process. I think a lot of work has been done really as we build new features, new products, new props, new journeys, that we really do that in a customer-centric, customer-driven way. And I think one should not underestimate also the cultural challenge here, right? I think banks have been full of experts who basically think they know everything on behalf of the customer. But clearly that's not the case. And I don't want to devalue, right, expert opinion. I think it also has a view, right? And I think it has a view particularly when it comes to BNPL as an example, right? Because I think when we talk here about customer centricity, one needs to distinguish. There is customer centricity when it comes to the journey, right? The product, if I may say so. And here clearly, I mean, we all strive for keep it simple, frictionless, as easy for the customer to get what they want, right? But I think also with lending, there is this trade-off then, because customer-centric in this respect also means that as a bank, we lend responsible. I think, Chris, you used this word before, right? This term, I like it very much. Thanks for that. So it's also then about safeguarding and protecting the customer. And unfortunately, these are both of them basically put the customer in the center, but sometimes it's not necessarily complementary. And I think what we see now is not only driven by regulations, but also by, I think, industry participants recognizing that customer centricity, like the way to put on also safeguarding, protecting customer, right? Medium term, It's not only am I good today, but helping the customer to understand, I take out this product. What does this mean for my cash flows in a month, 3 months, 5 months, right? I think is important. And the final word then on that is really then to think, okay, it's not just the point of origination where the customer should be, but then also think, how can you help the customer as they've taken up the products and maybe put another purchase through in installments? What does this actually mean for their financial situation? And the great opportunity we have today with all these digital opportunities we have with more data available, presenting the data, think about financial management, I can actually give the customer a much more transparent picture, nudge the customer, make the customer aware what they can take on, what they shouldn't take on. And I think here as a bank, we play a very important role. To make the customer aware, show the customer also based upon data, what might be in their best interest, not only short term but also medium term.
Yeah, I mean, I totally agree. I think there's one point you touched on there is it's frictionless. I think that sometimes the default position when it comes to a payment flow is zero friction. One of the metrics that many journeys are measured on is speed, like time to completion. But I think in this, in certain cases, it's maybe not frictionless. It's just less friction. And then in some cases, like you mentioned, if you're adding products, you add a product, you get to the end, fine, and then you maybe upsell another product. There's cases where friction, there's friction for good. There's positive friction, which is friction which enables the customer to understand more about what this product is, about what the consequences of this product is, whether there's a hard credit check or a soft credit check, all of that kind of stuff. They may not understand it, but it's up to the financial services organization or the fintech or whatever that end-to-end journey is. It's their responsibility to really explain it and say, this is a hard credit check. This is what it means. It's going to be a hard. This is what it means. This is the impact. Are you sure? And are you sure is always it's a friction, but it is a friction for good, very much. It's that. I use the old analogy of emptying a recycle bin and completely emptying it. They always ask you, are you sure? That's positive friction, because if you accidentally delete, pictures of your child from 30 years ago, then that's gone forever. The are you sure bit is a great bit of positive friction to just remind you, oh, let me just quickly check. There's nothing in there that's going to be gone forever. So I think the friction point is a great point. Christian, I'd love to get your thoughts on it.
Hard to add after Matthias, I have to admit, but let me. I mean, basically, I mentioned this term responsible lending earlier, and I think this nicely wraps up what actually Matthias mentioned. So what we tend to do, I mean, obviously, as we work with banks, everything we do about credit scoring and onboarding is really next to credit scoring, even if it's buy now, pay later. And I think where we really helped banks and succeeded to reduce bad debt rates by 50%, therefore obviously also just gave loans away to consumers who could afford, is to leverage PSD2 data. This was really something which was a game changer for us, which we work with basically since 2016. And I can only recommend to really leverage everything around open banking in this regard. And the second point is not to add new interfaces, new apps. Let's get those products from a customer centricity point of view into existing interfaces, into the customer journeys where they use, like we do with Raiffeisen, hopefully in the future as well, do their daily banking anyways from day to day. As we see that customers are just sick and tired of installing new apps, getting into new interfaces, also hooking up with new brands, offering them loans, and then chasing them for up and cross-selling, which has nothing to do with the customer financing actually in the first place.
Yeah, I mean it's such a great point, because it's just there's a kind of decoupling of all of these features into separate products, and often like you said, sometimes it should be feature as part of a product, not a completely new product and a completely new app with a completely new login, a whole set of nurture journeys and emails that come with it, and it's often a lot of noise. So that's a really good point there. Biliana, I think you have mentioned very much of how Marketer takes a customer-centric approach. But I guess, is there anything to add to that from a BNPL specific standpoint?
I think Chris and Matthias said quite a lot. I'm not gonna comment anything on the responsible financing or bringing or friction, and just stop and breathe for a while. And are you sure you want to do this transaction? From our platform perspective, we do have some kind of controlling tools that the customers can use outside of, as I said, this financing. So first of all, I'm going to speak about responsibility from the cardholder and also from the setting up the program from the and having control by the customer. So from cardholder perspective, they can leverage some controls that we offer on our platform, which are authorization controls, which are velocity controls, which normally can be used to remediate fight fraud, but also they can be used for as a budgeting tool. So if the cardholder, we do have controls that allow if a cardholder goes on a spending spree, then the card to automatically switch itself off. And that's kind of an automatic control. Also, we do provide this live streaming for our customers for anything that goes on the platform. As soon as there is a transaction or anything, they will be getting a very granular view of this transaction, and they will be able to make instant decisions, quick decisions to know how to deal with this card, or maybe send push notifications to a cardholder and so on. To increase the awareness and the what's going on and confirm that they really want to do this installment transaction. But I guess it's when you say customer-centric approach, we only speak about those who have issue with maybe they missed a payment or two. So for people who already have a credit history and they missed a payment, this might potentially hurt their credit history, right? Credit record. But you also have in the market people who don't have a credit history. And how do you create a customer-centric solution for them? So I think for those customers, like slightly turning your question now, for those customers, it's good to use a BNPL product because it's a low cost for them. It's a low amount transaction in installment, but it helps them to build this credit history. So maybe in future, they will be eligible to apply for a bigger credit limit or a higher loan from the bank, because this product might help them do that. So it depends how you look on which cohort of the customers. But basically, that's my kind of contribution to this question.
Yeah, it's a great insight on the velocity point, because I guess a fintech or a startup could build a product using Credit2 and Marketer and have some velocity controls and specific rules on merchant spending to restrict, let's say, e-commerce spending to five purchases a day before you have some sort of social check-in and you have a two-factor authentication on that sixth payment, kind of like how contactless has that built-in verification. Or if you doing high amounts of contactless payments in a certain frequency, you have to use chip and pin again just to have that inbuilt protection. So I guess there's a lot of potential for folks to build, as everyone's mentioned, super responsible short-term credit products and organizations that really fit consumer needs. So the facilities, it sounds like all of the pieces are there. I guess it's just getting folks to build using it, building enough of a consumer base.
Yep, absolutely.
Great. So I'm going to move on to a question about regulation now. I think I've seen a number of figures about industry growth. I've seen some that say it's set to grow to a $300 billion industry in Europe by 2025. And I think using those statistics, I think Deloitte have said by that point, 2025, it would have captured 11% of European e-commerce market. Now, I guess there's a question about stifling that growth, and the question is, I guess, will regulation help or hinder the consumer benefit of short-term lending and slow the growth? And a kind of compounded question again, what regulatory challenges have you faced as part of your respective collaborations, if any? And yeah, should we go to Christian?
Well, I mean, the regulations from at least in Europe with regards to buy now pay later just got tightened. We all know. So they are more kind of to the credit side. And the next one, DORA, is coming up very soon, preparing. But I think in general, we are huge fans of the regulation taking place, and I think everybody will benefit from this. And as we serve banks in the first place, anyway, banks have to redefine where to compete and whom to partner with to deliver a value in a very disruptive market. And we believe, given the fintechs out there, they cannot succeed without any active support from the governments and to the regulators. And in the end, regulations, of course, only help if there is a clear frame set. And of course, they should not be over-engineered, which is the challenge sometimes. So this is what we need to tackle. But in the end, we believe that regulation really empowers bank, and like to phrase it, that the empire can strike back and take their fair share from the market, what fintechs took from them about 10 years ago, in combination with embedded finance.
I mean, it's a great point, and you've used a Star Wars reference, so I can't, preaching to the choir with me, Chris. I just want to touch on something you said with, the over-engineering of regulation. Is that, I guess, is that a reference to, over-engineering regulation can lead to kind of confusion and casting a really wide net, and therefore it kind of makes it difficult to understand exactly what financial services, fintechs, builders should do? Is that the point you're making with over-engineering?
That goes to me?
Yes, yeah, Chris, just to follow up.
Yeah, definitely. Banks obviously struggle with that issue, and normally we then kind of do it on their behalf. But in the end, we see the products built on a responsible lending approach, which basically covers or kind of gets the new regulation into the market. We have better products. We have less bad debt rates. We have better customers. We have better and more happy customers. So if you do it right, and from the beginning you say it's not something. I mean, we kind of just say it's bad. If you can set the sails accordingly and just adapt to where the wind is coming, you will be on the winning side, definitely. Amazing.
And Matthias, what about the question of stifling growth and regulation?
Yeah, look, I mean, it is. I don't want to give it one side and others. I think, Christian, what you are saying, I mean, what it boils down to is obviously regulation should be calibrated to the risks, right, that it's trying to address, the guardrails, right, that are better put in place, just that it's becoming a sustainable business. Because I think what no one wants is that it's all kind of exploding down the road. So I think I actually see quite some value here coming in terms of partnership when it comes to how to tackle regulations. Because what I found personally, particularly working with partners or companies who are not necessarily now a bank, right? We understand as bank very well what the regulations are, right? And clearly, as part of the partnership, it sometimes also takes a bit of under inverted commas, please don't understand me wrong, a bit education of the partner to say, look, these are the regulations we are operating in, right? These are the processes, the journeys, the controls we have in place today. And I think what a partner like Credit2 actually then does is, from a customer-centric perspective, help to resolve for these regulations, maybe with a fresh pair of eyes, right? To say, look, you have been doing kind of your underwriting for these products which are similar, that, and we think actually you can still kind of adhere to all the regulations by maybe changing the journey, the screen, the whatever it is, right? So I think so I mean, regulation should be calibrated. I think that's important. That's also one thing for us to try to shape the regulatory agenda and provide our input. So we should play an active role. So I mean, otherwise, I mean, it's just kind of I don't want us to be just victim of regulations, if I may say so. So I think long term it makes sense. And most importantly, that's also where I see the value of a good partnership coming in, because you might have or will have a partner who just once they understand the regulations might give you ideas or thoughts you haven't had, because they just look at it maybe less tainted, not through the banking classes, if I may say so, right?
Yeah, that's a great point. Yeah. So yeah, talking about, I think kind of this next point I'm going to touch on kind of brings together a couple of things we've just spoken about, including PSD2. So I at the start of the year was talking about Apple's new open banking feature, which essentially services balance and transactions through the Apple Wallet. Kind of my prediction for this year is that they're using that as an a secret way to start building a kind of VIP list of customers for their pay later launch in the UK. So, in the UK, open banking is mixed, I guess, mixed expertise, mixed expert reviews, but it's definitely supporting loads of use cases, and I think it's a massive on ramp for things like SME lending, huge embedded finance on ramp, and BNPL. But apart from open banking, are there any other digital transformation trends that you see enabling short-term lending growth? And I'll kind of jump to you, Bojana, if that's okay.
If I just unmute myself first. Yeah, thank you. So I've been thinking maybe what you mentioned about Apple and doing this with the open banking. I just recently I read about some kind of acquisition that they've done in the UK, and that there was another point over there to say that something in relation to affordability when the company wants to check the affordability of an individual, whether they are eligible for an installment product, how to do it. Just to go slightly back on the previous question, I know for the UK, because Chris and Matthias spoke about European landscape, we are aware, although we can't comment a lot about the regulation in the UK, but it's BNPL is unregulated at the moment. And we are aware there was a consultation process, and there is a lot of commotion and a lot of discussion and articles in the papers about this, and mostly because the affordability check is basically not required from the company. That's the situation. So maybe with the growth of the BNPL in future, there's going to be a growing data, and it's going to be more accessible, as you say, also via open banking. So all these companies may have more access to this data and use, and I'm just thinking, because I think it's already happening, using artificial intelligence to access all this data and kind of assess the credibility, the affordability of credit for an individual. And I think that started already, and I think it's a big transformation that will aid the entire ecosystem in the UK, specifically, obviously in Europe as well. Just one I wanted to mention. I think it's very interesting.
That's a great one, and I think it's used. AI is currently used, for at least for ones that I know, for some SME lenders to do risk tiering, because otherwise you have a team of operations and risk people looking at big spreadsheets of data, understanding, slicing, dicing it, picking out payments to kind of flag up. So open banking with some sort of machine learning functionality definitely can speed that up. I'm going to jump to another stat. This is one that I can't find the reference for, so forgive me. If someone knows where the reference is, please let me know. But I did see a stat somewhere that BNPL spending on air travel second half of December, the December just gone, is up 30% versus the previous December. So, I think air travel is a really great case from a consumer side. for using short-term lending. It's usually an over £500 cost, especially if you're going cross Atlantic or basically country to country. So I think it's a great use case. But what's one valuable use case for BNPL that you think is underused, or maybe just doesn't really exist in any form at the moment? Matthias, can I come to you first? Yeah, you're on mute.
Yeah. Sorry, just yes. Is this about growth of BNPL?
No, it's about more unique use cases, like use cases that are valuable use case that you see, but it's not really mainstream. So it's not e-commerce, for example, but it's maybe like a specific niche, like I mentioned, air travel. So like an airline ticket.
Yeah, I think you will see more of these specialized lending, or lending in some of these more niche areas. Absolutely. I also think it's about ease of or like accessibility. I mean, today, particularly if I think about BNPL, it's predominantly in the e-commerce space. I mean, we actually have some entities who also do it at the point of sale in the shop, right? And it's simply on the terminal, kind of press a few buttons and you're good. But this is all closed loop system. It's only for existing customers. So question is obviously how can you make it more open market, right? So this then also comes back to how can you make it more accessible in channels. And I think what you will also see increasingly just in conjunction with embedded finance, and I'm a big fan of that, right? Kind of where you actually offer these solutions, and you could say your Apple example, right? Kind of like already goes a bit in this direction, right? So no specific use case where I'm like that's it, but I think you will see a few areas where you kind of will see BNPL making inroads.
And Chris, have you got any specific areas that you think?
It was actually a quite tough one because we were really thinking of which use case is not covered, and we believe it's about more to accelerate on existing use cases where everything about health might be a use case where there's room to grow. But adding to Matthias, we do believe that the physical point of sale, so not talking about use cases, but treating a channel as a use case, is actually quite huge. As most of the buy now pay later offers are built for e-com. But if we think about revenue potential, I think it's fair to say that most of the verticals, the categories out there, do at least 60 to 70% of their revenues at the physical point of sale. And this is where we have to bring the ease of payment, if it comes to buy now pay later, even more to the physical point of sale, help the merchants, give this fantastic features to customers. And this is where I see a huge link, by the way, to the card product we offer with Visa and Marqeta, as it's the perfect omni-channel champion, which bridges physical and e-com. And then post-purchase, not with the hassle at the point of sale, but sit at the couch in the evening, have a beer, and open your app, select a transaction which is eligible, and just split it in 3, 5, 6, 9, whatever, 12 split pays.
Very cool. Yeah, amazing. So getting towards the end, just a couple of questions to close off, and this more kind of gravitates towards the future looking, what the future of BNPL looks like, longer term view. So what do you think, stick with you, Christian, broadly, what's next in the BNPL space? I say broadly, you don't have to touch on super specifics, and you don't have to give any IP away.
Well, of course, we can't tell you, but be assured we work in it. No, just kidding. So some of you might know that we work for this big, tech giant and based in Cupertino, and it's all about subscription. So if we kind of convert the buy now pay later model to a more kind of recurring model, and also addressing everything about circular economy, getting customer lifetime in there with automatically recurring subscription rent abonnements, Abo as in German, we think that's a huge topic. Of course, it only addresses products which have a receivable value, but still, this is huge. I think this is one area where buy now pay later will evolve into much, much, much more. And this is the point I'd like to add.
Yeah, that's a really good one, because I guess if we go classical BNPL, the measurement metric has largely been basket conversion, basket size, and it's kind of shifting that a little bit, and it's going not just basket, it's about one-off baskets. It's about what about the next payment and the next payment and the next purchase and the next purchase, and making sure that it's more about retention and longevity rather than just increasing that initial basket size. So that's
right.
I think that's a
couldn't
really
agree more. Yep.
Matthias, so you're itching to get in.
Yeah, like no good in terms of line. Look, I'm positive, upbeat. I mean, industry stats like have quite some aggressive CAGR growth bit for Europe, for the US. I mean, clearly that's coming from somewhere, right? For me, really the key why I'm quite upbeat is it provides customers with another way to pay. And if I look at the uptake and consumer preferences, particularly as I said earlier, millennials, Gen Z, etc., you already have a big cohort of consumers who are very familiar with this product, right? And yes, there are other alternatives, one could say, but they somehow prefer debit, they somehow prefer BNPL products over other products, right? And so I think this naturally already will drive growth here.
And Biljana, what's next in the BNPL space in terms of innovation?
Yeah, I was planning to say maybe if we look at the pain points that are today, and that especially in UK because it's not regulated, and then why some people are making some noise around that. So we know the financial literacy and awareness about the product and how individual cardholders behave. It's a big issue, and we need to increase this education. And I think some effort should be done here, maybe again through artificial intelligence and using a live stream or feed information sent to the cardholder. And this would create some kind of additional information and awareness for the cardholder, and they can use it to increase their literature. I mean, their knowledge about the product. So I think that's important to focus on, but also artificial intelligence to adjust maybe their limit, how much they can afford through installments. So maybe that can also be used. But definitely next, it is going to, I expect this to be growing even more. And then I think with the more data around and everybody in the ecosystem working together, the cardholders and everybody will become more comfortable with the installment as a product and continue to use it in the future.
Amazing. And just one last question. I'll stick with you, Biljana, just for this one, and maybe less than a minute if you can do it. It's obviously January. Loads of people are doing predictions. Loads of prediction articles going around. But it'd be good to get your predictions for the longer term future of BNPL. It's like a 5 to 10 year view, maybe. So what's your prediction?
I think it's a bad choice that you started with me because I don't have anything to say. I can just say with this is an economic situation and the economic uncertainty for the people, it definitely will provide that the BNPL will be growing even more. And as I said, cardholders everybody will be becoming more comfortable, and especially there's going to be even more brands, bigger competition. That's what I expect because it's booming, and more and more companies come up with the solution. They will be competing on the user journey and the customer experience. The more seamless and smooth and more convenient for the cardholder, the better they will be prepared for more hyper-personalized card offers. And of course, responsible lending as well will help this to grow in the future.
Not a bad one for off the cuff. Matthias?
Sorry, say again. Yeah. Thank you.
Let's go. We'll go finish off with Chris. Predictions for the next 5 to 10 years.
Yeah, well, it's quite a timeline, but my prediction would be that banks take over the business again because they have the right, they have the capability. They can also manage much better interest rates and refinancing costs. That will be in their favor, and that's not a factor we should underestimate out there. And I believe that also wallets will be a huge driver in this combination, and BNPL products which will blend with wallets a lot. And we just have to look at Apple Pay Later, and all this stuff. I mean, I believe they're setting the stage, and they will define what customers will expect also from other brands. So that would be my 5 cents.
Amazing. Matthias, if you've got something.
So sorry, Charles, I already thought I kind of gave you a bit my outlook. No numbers, right? But I think you will see growth. I'm upbeat. I think will be driven by the consumer, and I think also what Chris is saying is absolutely spot on, right? As you kind of increase reach, the offering, and we see it in some markets, right, where we have had similar products for quite some time, card based, but I mean, they are so established in the market that consumers would refer to these as a product category, right? This ability, you have a card and automatically everything gets put into installments or converted into installments. So in some markets, quite well established as an idea, right? So it's kind of positive.
Amazing. So just I guess continued growth there. Amazing. Thank you. I mean, just wrapping it up now. We're 2 minutes over, but thanks to our guests. Thank you to Biljana. Thanks, Matthias. Thanks to Chris. Follow them on LinkedIn. Follow their organizations. And of course, thanks to Marqeta. There's probably more API Chronicles to come. I mean, more technical deep dives would be great, Biljana. We'll try and get you back on there. And thanks everyone. Thanks everyone in the chat. Thanks for your questions. Cheers. Bye.
Thanks. Cheers.
Bye.